Now, live from KUSI, this is Good Business San Diego. Sponsored by Wilsey Asset Management.
Hi, I'm Roy Robertson. Welcome to Good Business San Diego, where we're talking about the topics that are important to you, your home, your family, your health, and your money. And the following portion of Good Business San Diego is sponsored by Wilsey Asset Management. The constant fluctuation in the stock market in the past couple of months has rattled many investors. So how do you withstand big market swings during volatile times like these? Brent Wilsey, the president of Wilsey Asset Management, is here with some advice. Okay, you've seen it before. Here we are again. What do we do?
Here we are again. Today, the president came out and he talked about, okay, we're going to back off some of the tariffs. Market goes up 1,000 points, goes back down. I mean, you've got to understand this is what we're in right now. Yeah. And what I want to talk today about is the great investors. And one thing I learned years ago when I first got in the industry was Tony Robbins. He talked about how he wanted to learn how to shoot. So he went to the Army Ranger School, and they go, well, here's our best trainer. He goes, I don't want the best trainer. I want your best shooter. They go, but that's the best trainer. He goes, no, I want the best shooter, because what he does, he emulates that person. And that's what I want people to do. That's what I've done, is emulate the great investors like Warren Buffett, David Dreeman, Marty Gabelli, Shelby Davis. What did they do to become successful? And one thing I will tell people, they did not use their emotions when investing. They used fundamentals to become a great investor. So that's what you have to do. And what I want people to do is, if they're not doing themselves, because investing is very hard, especially with emotions. We talk about emotions all the time. Right. But to do it themselves, or if they have a broker advisor, make sure that broker advisor is very knowledgeable. And I want to say too, the difference between a broker and advisor is, a broker is selling product that could pay commission, and advisors like us, where we don't make commissions, we make actually advisory fees off of growing that person's portfolio.
I know you also stress the importance of knowing what it is that you own, and most investors probably don't.
And you're right, they probably don't, and that's such a shame, because if you don't know what you own and why you own it, you're probably going to make some poor decisions. Mm-hmm. You have to look to say, well, why do I own this equity? Why do I own this stock? And I own it because it pays good dividends, it's a great business, and over time they'll grow those dividends and do very well. If you're in a 401k and have mutual funds in there, what is in that mutual fund? What companies does that mutual fund hold? What is the turnover rate, which shows how fast they're turning over the stocks in there? If a high turnover rate, that's not good. That means they're buying and selling too much themselves. So you've got to understand what you own in that portfolio, and then why. Because if you're a speculator and you just want that money to grow in a year or something, it's not going to be the same objective. So make sure you understand that, gee, this is for my retirement. And I want to point out, even when you retire, you probably have at 65, probably at least another 20 years to live on average.
Right, good point. You also need to have long range, a clear understanding of the objectives and a philosophy that goes behind that, right?
Yes, and that's what you want to do, because just because the tariffs change or the wind blows, you should not change your objectives, you should not change your philosophy. We've been value investors for probably 30 years now, and we don't change that because it works very well, and we've had our good periods and bad periods. Any philosophy will, but you've got to make sure that you stay on course of what you started with.
Just a few seconds left, but I know you also have a newsletter to inform people and keep them on track.
Yeah, the newsletter at smartinvesting2000.com is great, because it's a tool. There's about 10 topics in there. They're very short, easy to read. In there we talked about consumer sentiment, how consumer spending was actually up, but yet people are saying bad things. Get the newsletter. It really helps you out in investing. Smartinvesting2000.com.
Drops every Friday at 5 o'clock, and I don't mean 5:01, because I get it every week. Smartinvesting2000.com. The preceding portion of Good Business San Diego, sponsored by Wilsey Asset Management. We will be right back.